Even if we go on a 10 loss streak, that's only 3% of our account. It barely touches it. So the most important thing as to why traders fail. Hello everyone, and welcome back to Statira Trading. On today's episode, we're going to go through why traders fail when they're undercapitalized. Now, this is a very important subject and it's not touched on enough. People think that they can get into trading with a very small amount of money. Now, there is an element of that being true, but if you want it to be your full-time job or a bigger income, then we need to look into the hard facts. It's going to be a great episode, and I hope you take value from this. So first and foremost, when new traders get into the markets, they fantasize over it becoming their full-time job because they just love the game and they want to be traders. I myself included was in that when I first started, but the question really comes down to how much do I need in order for me to make an income from trading and make it my main source of income? Now, this was a question I always asked myself, and for now, I can see it as a wrong question, and let me dive into that. So let's run a scenario. Let's say you need to make £25,000 a year to cover your cost of living, and you want to use trading to cover that cost. Even on a £100,000 account, you would still need to make 25% for the year to cover your costs. And that would mean it would not allow your account to grow. If you make 25%, you need that £25,000 to live. So you're right back where you started at the start of the year, except you've got to go and do it again, another 25%. And if you look at the historical average, most people do not make money from trading. Most people don't even beat the S&P at trading. So you're just going to put yourself in a losing battle from day one. This is why you should never look at trading as a main income source unless you've got the right amount of capital. So you can even see on £100,000, you're still undercapitalized. So how can we turn this scenario around? First of all, don't see trading as your main source of income, because that will just add unnecessary stress and pressure, and with that, human emotion will take over, and you'll make rash and wrong decisions. And that will only deepen the wound of a potential losing streak, drawdown, or even over-risking. You should actually just treat your account like your trading account like an investing account. Understand that there will be losing streaks and drawdowns. Allowing these are sometimes healthy for the strategy depending on what style you trade. For example, if you're trading a trend following strategy, there will be periods where the market will range and go sideways. Now, in these conditions, we know that the likelihood of a trend following strategy will not work. But if you just keep applying them, eventually trends will come, and that's where the winners will come. But having these extra stress and making it your income source, you're going to have to rely on something coming in, and that's just going to lead you down a really dark path. So it is really crucial to apply these 2 points in trading when you're trying to grow your account, or if you're undercapitalized, trying to scale it. They're very important. So the next point as to why traders fail when they're undercapitalized is they think in short-term horizons, meaning that they say they start with £1,000 account. They're looking to grow that to $1 million as quick as possible. And with that comes very bad decision making. And the decision making that I'm on about is over risking. Now, people sometimes will go through winning streaks and they just start thinking that they can over risk, because a lot of beginner traders will go through that honeymoon period where they keep winning and then they just keep over risking because they think it's easy. And then the market completely flips and wipes them out. You should never do this. You should always stick to a low risk strategy like we do here at Statira, because losses are inevitable. They're going to come. You don't want to be in a position where when you're losing, you're risking 5-10% in your account per trade, because sometimes the losses can keep coming. Like if you've ever played game of roulette, The odds of red or black happening is completely random. Over a large sample size, yes, it will be 50-50, but you could have 12 reds in a row. And if you apply that to trading, that could be 12 losses in a row. And that's based on the fact that you have a 50% win rate in trading, which most people don't. So if you over risk and, think about the odds of your account going to zero, if you're risking 5 to 10% of trade, are almost 100. Whereas we risk 0.3% per trade. And even if we go in a 10 loss streak, that's only 3% of our account. It barely touches it. So the most important thing as to why traders fail is definitely over risking. And how you can counteract that scenario is keeping the risk low and sticking to your plan. Now, some of you won't have a plan or a trading strategy in place when it comes to trading, but we have got you covered, as we do offer our own algorithm, Sequenti to lease. Now, before you think about doing this, you need to check whether you're the right fit for the algo. So we have built our own EA assessment tool that will give you a score to see if you're the right fit. Now, we want to give peace of mind when trading, so we don't over risk, and everything we've went over in this video so far, we apply those points. We think from a long-term perspective, we risk low, and it's not our main income source. So we don't have any problems when it comes to emotion. The fact that it's an algorithm as well means that we don't intervene with any trades. The edge plays out. So there's two different scenarios as to why traders fail when they're undercapitalized. And it all really comes down to two different things. One, people think in short-term horizons, and this with small accounts makes them fail. If you just applied a long-term mindset and allowed probabilities to play out, keeping it low risk, your chances of success significantly increase. And to go alongside this, we need to make sure that we don't use it as our main income source, because with trading, there can be some good years and some bad years. Trading is completely random. The most important thing is your statistics and know your average drawdowns, your returns, and put them together and have that long-term mindset alongside that. Because as explained in the video, if you had £100,000 and you make 25% a year, which is pretty decent, your outgoings will be 25,000, which is 25%, and you're left with making nothing at the end of the year. What happens if you go into the next year and you lose money? Then you're just going to eat into your account and never grow it. So that's why it's so important that we don't use it as a sole income while our account sizes are small. Because again, undercapitalization will lead you to long-term failure. So how should you approach it? You should approach it with an investing point of view, like what we do. We don't look at what happens this week or what happens next week or what happens in a month's time. We look at it with a long-term mindset and think, okay, how does it do over the year? How can I scale this over the next year? So we use a thing called dollar cost average, and we buy in every single month. This allows us to grow our capital and get those long-term results. Now, if you have enjoyed this episode, please give the video a like. And if you want to see more on topics like this, please subscribe to the channel. Until then, thanks very much for watching, and we'll see you in the next video.